Hey everyone, welcome back to Upside Down Data. In this video, I'm going to give you a rundown of an ongoing dynamic with Bitcoin where the supply side looks bullish, but the demand side is bearish. I'm going to talk about what's causing it and what it tells us about if and when the price of Bitcoin could potentially make a new all-time high. So if you guys like the content, subscribe to the channel, give the video a like, and follow us on Twitter for regular updates about our risk indicators for Bitcoin, Ethereum, and 26 altcoins. So the other day we had Jay from Daily Crypto Analysis on the show. And one of the things that we discussed was this analogy that people have been using for a few months now to describe Bitcoin's price action. This is the idea that Bitcoin's price is like a beach ball being held underwater. The idea with it is that Bitcoin is ready to pop to the upside, but is being artificially held underwater by other forces. So when you've got a beach ball and you push it underwater, it tries to come up to the surface unless you keep holding it down there. That's the analogy. We all pretty much agreed that the analogy makes some sense. The only question is, how strongly are those factors that are holding it underwater? So let's take a look at a few pieces of evidence that the conditions for Bitcoin in and of itself look pretty good for an uptrend. Then we'll look at a couple factors that have been preventing it from entering that uptrend. And the point that I really want to emphasize in this video is that if and when those external factors ease up, it's likely that we'll see another one of Bitcoin's trademark explosive bull markets. So as much as it's not a very fun period of time right now in the market, it's also a huge opportunity, in my opinion, to accumulate fundamentally strong assets, starting with Bitcoin and Ethereum, that will probably go much higher eventually. That's not financial advice, obviously, but you know, if you're here in the crypto space, this is the time that you wait for to accumulate. So first, let's look at the bullish signals. These are on Bitcoin's supply side as opposed to the demand side. And what that means is that as time goes on, people are less and less willing to sell their Bitcoin. And so there's less and less of it available to buy. There's a lot of evidence for this. Let's just look at two indicators that I think make the point pretty clearly. Let's pull this up. So the first of these indicators is the amount of Bitcoin being held on exchanges. I'm going to get myself out of the way to make sure that you can see clearly. This figure has been in a downtrend since the COVID crash in March of 2020. So we can see at about 3 million is where we had that peak in the supply being held on exchanges. It's interesting to see it peaking at such a round number. I'm not sure why that should be the case, but it does seem to have hit resistance on a couple of different occasions at 3 million before entering the downtrend that it's still in right now. And you know, although it increased a little bit, the amount of supply on exchanges between about April and June of 2021, it ultimately continued to the downside and is making new lows now, week after week. So we can see that the figure now is, you know, it continues down and it's now at about 2.27 million, 2,273,000. We can see that this number has been going down for quite a while now, and it continues to do so. What does this mean? Very simply, it means that fewer people are looking for opportunities to sell or actively trading on exchanges. Instead, more and more people are moving their coins off of exchanges for long-term safekeeping. Those Bitcoin are removed from the active supply. This increases the potential for a price surge if new investors come to exchanges looking to buy, because when they do, there just isn't as much there for them anymore. So this is bullish for the supply side. The supply is shrinking because people are holding. They're taking their coins off exchanges and they're not available for other people to buy anymore. That's bullish supply side indicator number one. This is over here on CryptoQuant. This is a good website for accessing this and many other indicators. If you're interested, let's go over to look into Bitcoin, which is also useful and has some different metrics. So these are good to complement each other. This indicator is HODL Waves. I really like this metric. A lot of on-chain analytics are pretty complicated, but this one isn't. It simply tells you what proportion of the Bitcoin supply has been held for a given period of time. So zoom in a little bit on this. So up here in this purple band, these are coins that have been held for 10 or more years. That's about 13% of the supply right now. Below that, in blue, we have 7 to 10 years, which is about 7% of the supply. So 20% of the supply hasn't changed hands in at least 7 years. Then in the next 3 waves, so these light blue, green, light green waves, we have the 2 to 7 year period, which represent another 26% of supply. Then we get to the section that I think is most interesting. This is the 1 to 2 year coins in kind of this light yellow shade here. And the reason I think this is so interesting is because the percentage of coins held between 1 and 2 years has approximately doubled over the last few months. We've not seen other HODL waves, other bands here show similar increases. This seems to be specific to this 1 to 2 year period. Right now it's at about 19%. Why is that important? Well, because 1 year ago is almost exactly when the whole market dumped and entered a correction phase, back in April 2021. So what this is telling us is that a substantial number of coins that were purchased either before Bitcoin topped in the spring of 2021, so during its run up, or maybe at the very beginning of its run up in that bull market phase, or that were purchased near the top while it was kind of ranging up here in the 60Ks before it ultimately corrected. So a substantial number of coins that were purchased then are still being held. A lot of people who bought then are not capitulating and selling them at lower levels. They're simply waiting for the market to turn bullish again. So this tells you something about the expectations of people who've been holding for that period of time. So this is another bullish sign on the supply side. People are taking their coins off of exchanges and they're simply waiting out the bear market that we're currently in. So the market is bullish on the supply side. The problem is with demand. If there were an influx of buyers and if some FOMO took hold in market sentiment, then the market conditions on the supply side would be good for a bull market. It's just that the demand is not there. And there are lots of indicators of this too. Let's go back over to the price chart and pull up the DXY. One indicator that shows this is the US dollar index, the DXY. As you can see, it's been going absolutely parabolic recently. This is the weekly chart, putting in its 3rd consecutive green candle right now. The week just began, so we'll see what happens with it. But it's been very, very bullish over the past 2 weeks and really over the past few months. This tells us that people are reducing their exposure to risk on assets like equities and crypto, that people are instead preferring to hold safer assets, including cash. People are selling their stocks and crypto for cash. And the DXY is currently testing the level that it consolidated at back in the spring of 2020 after the COVID crash. You can see that back here. It spent some time getting rejected off of its current level before entering a downtrend that coincided with a major bull market for crypto as well as equities. So the DXY is at a critical level, but it's telling us something right now through this pump. And what it's telling us is that people are not comfortable taking on much risk. Another indicator that we can look at that's relevant to the demand side is the recent activity of larger versus smaller Bitcoin holders. Typically, larger holders are more savvy and experienced and successful than smaller holders. And so it's useful to watch their behavior. And what we can see from this chart, which was produced by Econometrics, a good follow on Twitter, is that although small investors, these are people who hold less than 1 Bitcoin, have been consistently adding to their position over the last few months, larger investors who hold at least 1 Bitcoin have been less consistent. So these dots are color-coded according to whether larger investors and smaller investors are increasing or reducing their positions over the last 30 days. And so these light blue dots that we've been seeing a lot of recently indicate that people who hold at least one Bitcoin, up to 10 Bitcoin, which is a pretty substantial amount of wealth, have been on net reducing their positions over the last 30 days, mostly. While smaller investors who hold less than one Bitcoin have, on average, been increasing their positions over the last 30 days. There are some red dots, and when we see those red dots, it indicates that both smaller and larger investors were increasing their positions at those times. It's just that that's been pretty sporadic. For the most part, we've seen that it's the smaller fish who have been accumulating while the larger investors have not been. This is a problem because small investors don't have enough firepower to drive a bull market on their own. It's going to require bigger players to buy in to get a bull market started. Larger investors have every reason to be cautious for now. I mean, the US Federal Reserve is very hawkish about interest rates, and there's a great deal of uncertainty about how they're going to manage interest rate hikes over the coming months and potentially longer than that. The broader macroeconomic climate is inflationary, and that's straining people and also creating doubts about whether it's wise to be exposed to risky assets. And there's also a lot of uncertainty about political affairs, which have effects on commodity prices, supply chains, and all kinds of macroeconomic factors that are going to trickle down into the markets and that are going to affect the prices of the assets that we're monitoring. So these demand side indicators are really important to watch because we know that the supply side is bullish. It might take a while longer for those things to line up. We need to see bullish supply and demand sides in order to have confidence that a bull market could be brewing. When we do see the dollar start to pull back and we see larger investors start to increase their positions, that's when it'll be go time. Till then, try not to get wrecked short-term trading. Try not to get bored and tune out because bull markets can make you money, but it's the bear markets that make you rich.